July 14, 2021, a low hum, the constant thrum of industrial machinery echoing in the vast, windowless space. Somewhere in that echoing darkness an inventory was being taken, not of copper wire or microchips, but of potential, the sheer, untraceable power of decentralized currency. How could a single entity, operating entirely off the grid, amass a fortune whispered to be over $15 billion in Bitcoin, all while relying on a workforce whose very existence was a state secret? The ledger was invisible, the physical location unknown, but the chilling reality was that every single digital asset was underpinned by human suffering. A sprawling, clandestine operation, hidden in plain sight, connected by the faint rhythmic clicking of keyboards deep within the concrete shell. Chapter 1. The Echo Chamber. It began not with a grand pronouncement but with a simple, almost accidental discovery on a dark web forum. A flicker of code, a reference to an energy drain so immense it momentarily stressed regional power grids in a location that officially didn't exist. The initial reports were dismissed as noise, digital static, but the pattern repeated. Power spikes correlating with massive, coordinated hash rate fluctuations. Someone, or something, was mining Bitcoin at a scale that defied contemporary understanding of private enterprise. The scale suggested a nation-state, but the operational signature was far more sophisticated, far quieter. It suggested a ghost. The sheer volume of computing power required meant immense constant cooling, and cooling requires water, a resource that leaves traces even in the most remote controlled environments. The first break wasn't in the digital realm, it was in the thermal signature picked up by aging satellite imagery, a persistent unnatural heat plume rising from the arid plains bordering the disputed territory. Chapter 2. The Unspoken Agreement. The architecture of the operation was built on layers of plausible deniability. Tracing the initial capital investment was like grasping at smoke. Shell corporations dissolved before they could be officially registered. Venture capital funds vanished into offshore havens faster than regulatory bodies could issue subpoenas. The true mechanism, the engine driving the profitability, was far more horrifying than complex financial engineering. It was coercion. The digital gold rush demanded constant physical maintenance, hardware swaps, dust removal, emergency reboot sequences executed in high-risk environments. These tasks were not performed by highly paid technicians. They were performed by those whose labor was considered disposable, whose absence would generate no immediate alarm. Whispers suggested repurposed facilities, sites used for long-term detention, now serving a new, silent master. The computers hummed a deadly lullaby over the enslaved, a constant reminder that their only function was to fuel the anonymous wealth accumulation. The state actors involved were not the obvious players. They were the shadows behind the shadows, entities whose mandate was not public service but absolute resource acquisition, using cryptocurrency as the ultimate untraceable treasury. They understood that fiat currency could be frozen, seized, or devalued by political decree. Bitcoin, however, once secured in the correct multi-signature configuration, became immutable. It was liquid nation-building, divorced entirely from international oversight. The $15 billion figure wasn't just an estimate of stored value, it represented a sovereign reserve that could fund decades of covert operations, bypassing sanctions entirely. Every successful block reward mined was a brick laid in a fortress designed to withstand any external pressure. Chapter 3. The Migration of Assets. The challenge for the Ghost Empire wasn't earning the Bitcoin. It was moving it, spending it without leaving a traceable chain leading back to the source of the forced labor. This required a secondary layer of computational mastery. They developed proprietary mixers, algorithms so complex they essentially atomized the currency, scattering fractions across millions of wallets in milliseconds, only to reassemble them months later in controlled exchanges operating under the guise of legitimate commodities trading houses in neutral jurisdictions. Imagine a torrent of water being instantly converted into individual droplets, carried by 1,000 streams, and then miraculously reforming into a single, clean flow miles downstream. The tracking software used by global law enforcement simply overloaded, generating meaningless noise. The physical infrastructure mirrored this complexity. When one mining hub became too hot, when the satellite imagery got too focused, when local energy regulators started asking inconvenient questions about the load, the operation didn't shut down. It migrated. Specialized transport teams moving under the cover of night would dismantle entire server farms in a matter of hours. They didn't use standard shipping containers. They used custom-built shielded modules designed to look like standard industrial HVAC units complete with falsified maintenance logs. The sound of heavy machinery moving equipment across barren landscapes, masked by the constant, deliberate white noise of routine industrial activity. They were ghosts packing up their infrastructure and vanishing, leaving behind only depleted power grids and the lingering scent of ozone. Chapter 4. The Fractured Coin. The true genius and the ultimate danger lay in the operational security. The individuals running the network, the engineers, the logistics coordinators, were insulated by multiple degrees of compartmentalization. No single person possessed the complete map. The workers in the dark facilities knew only their immediate supervisor and the relentless demands of the hardware. The technicians maintaining the mixing algorithms only knew the required output parameters, never the input source. Even the leaders controlling the final treasury keys communicated only through encrypted, one-time pads generated by external, uncompromised systems. This structure ensured that if one node was compromised, the entire enterprise wouldn't collapse. It would merely shed the infected limb and continue its silent march toward accumulation. But even ghosts leave traces. A moment of hubris. A single, minor software bug in the environmental monitoring system of the primary facility. A system designed to prevent catastrophic overheating that would destroy billions in hardware. For a fleeting 90 seconds, the external telemetry briefly defaulted to an unencrypted handshake protocol, broadcasting a standard maintenance alert. It was only caught because an independent cybersecurity firm tracking anomalous energy consumption in the region for unrelated climate research noted the unusual data packet structure. They didn't understand the context, but they knew the signal was too clean, too structured, to be random interference. It was the digital equivalent of a fingerprint left on a dusty doorknob. Chapter 5. The Implications of Immortality. That 90-second window didn't reveal the location, nor the identities of the masterminds. It confirmed only the scale of the computing power and the existence of an organized, well-funded entity operating beyond international jurisdiction. The $15 billion in Bitcoin stopped being just money. It became a weapon of strategic destabilization. It was the treasury that funded an alternate reality, an entire shadow economy capable of underwriting black market arms deals, cyber warfare campaigns, and political interference without ever touching a sovereign banking system. The central mystery, the one that keeps intelligence agencies awake, is not who they are, but what they are building towards. Accumulation this vast, this ruthlessly protected, suggests a goal far beyond simple wealth preservation. It suggests the creation of an economic entity so large, so entrenched in the digital fabric of global finance, that its collapse would trigger a systemic shock wave far greater than any market correction. The relentless mining continues, the servers hum, and the forced labor continues to maintain the digital engine. The Ghost Empire is not just hoarding digital gold, they are forging the infrastructure for a new kind of sovereignty, one powered by stolen electricity and built upon the silence of the unseen. The question hanging in the air, as the digital ledger grows heavier, is whether the world will even notice the shift in power until the last flicker of resistance has been mined away.